All right. One question that I get quite a bit is, Kevin, who does your bookkeeping? Because as many people probably are aware, I'm selling in, I think it's 10 countries on Amazon. I've got accounts with Payoneer and ping pong payments and all kinds of different currencies. I've got, various bank accounts, various credit cards, various all these other things. Sometimes I have trouble like keeping track of my own situation. And so I thought it would be an interesting discussion to bring on the folks who actually handle my bookkeeping. So super excited to have Siddhartha Havelia and Manvi Arora from Mercurius Advisory Services, who handle my bookkeeping. So super excited to have both of you here today. So thank you for jumping on Maximizing E-commerce.
Hey, Kevin, thank you so much for inviting us for this podcast. In fact, it's a pleasure for us to be here on the show and, in fact, to be assisting you in the bookkeeping. I mean, it's been a long journey with you. So I think we have been working on your books for almost like 4 years now. And hopefully, I mean, we did not mess up a lot of things.
No, I'll say this. I'll say this. My accountant, my CPA here in the States, who I use to do my income taxes, he's not afraid of sharing his opinions on just about everything in life, politics, bookkeeping, whatever. But he seems happy with the books, and he seems to think that if, God forbid, knock on wood, the IRS was to look at my books, they would be happy with it. So that's a good thing. So just a little bit of a background, like, there's different types of bookkeepers. And as I understand it, between the two of you, you both have some certifications beyond just, a bookkeeping certificate. You guys are both chartered accountants in India. So you guys are based out of India. Whereas Siddhartha, you are a chartered
Yes,
accountant in the UK.
that's
And
right.
Manvi, you are a CPA in the States, a certified public
Correct.
accountant.
Yes, that's
That's
right.
right. Yeah.
Gotcha. And then the chartered accountant title, with whether in India or the UK, is kind of the equivalent of a CPA in the US. Is that a correct
Right.
statement?
Yeah, that's
That's right.
absolutely right. So, I mean, it's just the terminology difference. You use the word chartered accountant and the certified public accountant. Rest, everything is same.
Gotcha. And I'm sure there's a lot of, uh, technicalities with the debits and the credits and all that fun stuff. So
Believe me, I mean, understanding debits and credit is never easy. I mean, I still remember when I started with the commerce background back in class 11. So, I mean, the teacher came in front of me and he asked me, I mean, Siddharth, what is debit and credit? And I was like all clueless. I was like, oh my God, what is the question that you've asked me? And it took me like a lot of time to understand it. But now it's like, oh my God, it's like such an easy concept. And it's just like a basic concept of accounting. So debit is something, I mean, which you can put it very easily, anything that you're spending out of your pocket or you are spending from your bank account.
mm,
Or credit, you can say anything which is coming to you. So I mean, end of the day, Kevin, when you pay our bills, it's debit for you, right? And when we
mhm.
get that money in our bank account, so it's a credit for us.
Gotcha. So it's a debit and a credit for
Yeah, that's
depending
right.
on which side of the equation you're on in that
Which
case.
side of the equation it's coming on?
Yes. Okay. Good. So, all right. So let's talk a little bit about, I'm glad to have this conversation, and thank you for pointing out. Yeah, it's been 3-4 years that you guys have been doing my books. I've sent quite a few people your way, and they all seem pretty happy with it. So I figured it would just be one of those things that would make sense to, have a discussion around bookkeeping, because I get this question a lot, like, who does the bookkeeping? Because, you know, one of the things you find is, you're a seller. If you start dabbling, like, let's say my own situation, dabbling in a little bit of retail arbitrage, or you're just selling on Amazon in the US, it can be fairly simple to keep track of things with a spreadsheet. But then when you start having to get into, like, whether you're doing QuickBooks or Zero or whatever you're using, it starts getting more complex. And, like, in my case, multiple currency. So what suggestions would you have for someone who, you know, whether they're just starting out or they're an 8-figure seller who is in all kinds of marketplaces on and off Amazon, what's a basic framework of a bookkeeping system to keep track of all this stuff?
One of the primary objectives, so I would rather say that whenever the person starts a business, I mean, the first thing he does is just to concentrate on the business and to grow with the business, right? Bookkeeping is something that he does not looks at it till the time he is actually in a messed up situation, or there comes like a tax deadline or a tax bill. That is
Mm-hmm.
actually the time the person thinks of an accountant or a bookkeeper, or about IRS or CRA or HMRC. I mean, whichever
Mm-hmm.
word you want to put forward, but across the globe, the situation is the same. So my submission would be, I mean, definitely as a client, whenever you start a business, do not start your bookkeeping immediately, but do not defer it for a long period of time. So probably when you're testing out a business, in 3 months or 6 months time, you are relatively comfortable whether you want to do that particular business or you don't want to do a business. So from that juncture itself, think about setting up a bookkeeping, think about setting up these systems and processes, so that when the tax time comes, when the IRS sends the bill, you are in a comfortable situation. Then there also comes a situation, I would say, I mean, a lot of my clients, whenever we sign up the client, they say that, Siddharth, I mean, even though we are doing the bookkeeping, but we are not sure what is it that we are earning, right? Because we are just
Mm.
compiling everything in the Excel spreadsheet. We are putting all the receipts together. I mean, I'm not talking about the people who do not have like the spreadsheets or the receipts and all those things. I am assuming that people are doing that, right? So when they do that, they say that, I don't know, I mean, what kind of stocks do we have? I don't know whether we are actually earning the profits or not. I don't know. I mean, whether I should, as an owner, should I draw some kind of a salary for myself, or is there like some kind of a distribution that I should take? So
Mm.
in all these different kind of scenarios, it becomes very important for a person to set up the proper bookkeeping system, to set up the processes so that the books are there, they're properly organized. I mean, it as a client, it's not going to take you much time. Believe me, on a monthly basis, you will just have to spare like an hour or two to assist your bookkeeper in sending the details, or to look at the reports which he's sending across. Mami, do you want to add something on this particular question?
Yeah, I completely agree with you. I mean, it's not gonna take you, I would say. So that's at hours, but considering the automated technology and everything, I mean, if you just give us the, use an application who can just pull up the data automatically, it doesn't even take that much of a time. And it's on a monthly basis. So out of so many hours you have, it just me, the bookkeepers are asking on a fraction of time and everything is on us. We'll do everything for you and we'll just give you the reports, everything, so that you can see where your business is growing, because that's how all your energies have been put on running a business. So we are just supporting you to ensure that you are going into good direction, and yeah, everyone's earning money. That's the goal.
Yes, yes, and that's the thing, is everyone should be earning money. And I have a friend of mine one time who he started hiring a bookkeeper, and they told him basically he was losing money, and he's like, "That's impossible. I have money in my bank account." Now, that's not quite the way to look at it, because as
Right.
you guys are both laughing, so for folks in the who are listening to the audio version of this podcast, know now that that is not something that's, you just look at your bank account and that's how you know, because in your personal accounts, that's a little bit how you might be able to look at it. But there are some differences between business accounts and your
Personal.
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 Yeah, exactly. So with business, there's some various reports. So let's talk about some of the basic reports, like
Mhm,
profit and loss and balance sheet. Like,
mhm.
how would you describe that? Manvi, I'll let you start with this one.
Okay, so profit and loss is like a summary of all the revenue that you have generated
Hmm.
minus all the expenses that you have done for the business. We'll just keep it simple. That's like, so it just shows you a basic of that. Wherein
Sure.
balance sheet shows your net worth of the business, as in what are your
Mm,
assets, right? What are your liabilities, which is basically what a money you owe to outside parties,
hmm.
and what money you owe to yourself. So balance sheet just shows your total value of the business, and wherein, I mean, these are the two basic reports we talk about. Of course, we can go into nitty gritty and see a lot of
Sure.
other reports like cash flow report, journal ledgers, AR summary, aging summary, but that's like for us to do. So for, I would say, for the client or for the customer, if you just look at the profit and loss, it will tell you how much net profit you have earned during a period of time, which categories you're spending more, spending less. I mean, whether your advertisement cost is up to the industry standard or not, or whether you are paying too much to Amazon for the fees and Amazon business is just not doing well for you. Wherein if you're selling it on Walmart, it's giving you more, benefits, stuff like that. Right.
Okay.
And balance sheet kinds of shows that, okay, tomorrow, okay, we are living in like 2 years, it's been COVID thing, right? So your balance sheet would show at the end of the day, okay, that something like that COVID came up and people have to shut down business, and that's unfortunate. But
Mhm.
the balance sheet would have shown that, okay, if you have to shut down or if you have to revive, either ways, right? That's like two sides of the coin. The balance sheet would help us to determine what all you have, like you said earlier, how much you have in the bank account, how much you hold in inventory, and at the same time how much you owe to yourself or to third parties, be it your credit card companies or be it any loan that you have taken from family or friends. So balance sheet would kind of, show you that what your businesses actually have kind of generated over the years and what's the value of the business. So if you want to sell it out or you want to pay off your liabilities, that's going to help. I mean, so that would just add a few words to it, and I think that would cover up what I have said.
Yeah,
So
that's
I think
great. And Siddhartha, I'll let you get into the basic formula because I know that there's a basic formula I remember from
Right.
college of, this minus this equals
Revenue
that.
money.
So
Yeah.
how would you describe the profit and loss, and how would you describe from the pure formula that, accountants probably talk about in accounting 101, as well as the one both for profit and loss and balance sheet?
So, I mean, I am going to put it together in a very simple two-liners. So, profit and loss, I would say all your income
Uh-huh.
minus all your expenses is
Uh-huh.
what you have earned during a particular period. Now, I mean, you can analyze the results for 1 month, you can analyze the results for 6 months or a year or since the inception of the business. So, profit is just going to be there and the formula is just going to be same. So, sales minus or the revenues minus the expenses is what you will earn, right? Balance sheet, I mean, balance sheet now comes like a situation which is the most important situation. So balance sheet, as Manvi said, I mean, determines the net worth of an individual. So what exactly is the net worth? Net worth is, I mean, as of today or as at a particular date, what is the actual value of the business? When I'm talking about value, I'm not talking about the valuation aspect. I'm just saying, I mean, the results of everything that you have done in the business till now. So that's going to be asset minus liabilities. Asset, now, I mean, I'm not sure whether everyone up here knows the assets or the liabilities. So asset is something which the business owns, something like an inventory, something like a bank balance, something like investments and all. Liabilities is any amount that you have to pay to the third parties, like the loan balances, the credit card balances, the federal tax bill, or the payroll liabilities and all those things. So, I mean, the resultant is what you have earned for yourself from the business.
Got it. So, and a lot of times people use the term owner's equity. And so
Yes, that's
owner's
right.
equity is assets minus liabilities. And so if you think
Right.
about like a house, like people talk about like, oh, the equity I have in my house. Well, you have a liability, which is your loan, and you have a value of your house, which is the asset. So the value of your house minus the how much you owe left in the loan is your equity in the house. And it works basically the same way in the business. It's just there's a lot more moving pieces to it, right?
Right. Right.
Absolutely. That's in fact a classic example of explaining, I mean, what is like the owner's equity.
Yes, yes. Okay, good. So okay, hopefully that helps to clarify some of that for folks. Now, one of the things that people often worry about is I think some people almost have this fear of when it's tax time, going to their accountant. I might have a little bit of that. I will fully admit I tend to ask for the IRS allows a 6-month extension. I tend to do the extension a lot of times. It's probably not a good thing. My accountant is like, get it to me earlier. I'm like, oh yeah, I'll do it this year. And then it never really quite happens. And it's not because you guys didn't have the information already created. It usually is some holdup on my end. So there's usually this kind of like friction in a lot of people's heads. So from a very basic standpoint, what is the report you'd be pulling to take to your accountant when it's time to do taxes?
See, now if I talk about the e-commerce clients and assuming that you're doing your bookkeeping, right,
Mm,
for previous year or what you call as a tax year. So I mean, let's assume that we are sitting in 2021 and we have to file the tax reports for 2020.
mhm,
So in that scenario, our tax year is going to be January till December of 2020. So we just have to provide few things to the accountants. One is the profit and loss account.
mhm,
Second is the balance sheet.
mhm,
Third is the tax form. So I mean, in case of Amazon shares 1099K in case you have
mm,
like a full-time job with yourself. So you would have received like W-2 from your
mhm,
employer. In case you're using your own car for the purpose of the business, then you would have some kind of mileage, right? Or you would have to claim those amounts. So you will have to tell your accountant that this is the mileage that we have used. Then there are few people who do not, or I would rather say who are using their home for the purpose of office. So in that scenario, the accountant is going to ask, I mean, what portion of your home you're using for the office purposes and what are like the generic home expenses. So you can just say like the internet, telephone lines, rental expense, mortgages, the interest thereon. So whatever these things are, and then as an accountant, it's going to be our responsibility to take forward everything therefrom. Do not worry is what the mantra is.
mhm. Gotcha, gotcha. So yeah, don't worry about all that stuff because it can be very easy to go down rabbit trails. I've come to
Right.
learn is that oftentimes as a e-commerce entrepreneur, we start off having to be the one to figure out everything. And then as we grow, sometimes we have trouble letting go of things. Like no one can do it as well as I can. Well, I can tell just about everyone listening, bookkeeping is one of those very simple ones you can let go because chances are you probably don't know what you're doing. And I have an MBA and I don't talk about that very much, but I tend to find bookkeeping to be very cumbersome and especially with e-commerce because there's a lot of different moving pieces and a lot of different accounts. It's not as simple as your personal accounts where it's like, to your point, like, if you have a job, it's the money you have coming in minus how much you spend and what do you have left over at the end of the month. That's kind of your profit and loss, or even really your balance sheet, kind of works the same way with personal. But with business, you really have to have separate accounts to separate business and personal. You have to, from there, now you got all these different moving pieces. Now, one of the moving pieces that's kind of confusing for folks, especially in e-commerce, for at least here in the US, most folks are on cash basis for um, most expenses and accrual basis for inventory because Uncle Sam says that's the way we have to do it. Can you explain to me the difference between cash and accrual and how that works with inventory?
Mani, do you want to address this question or do you want me to address it?
No, I'm okay. Either ways. You want me to do it, I'll do
Go ahead,
it.
Manvi.
Go
Okay.
ahead.
So cash basis is simple. You know it. Money that comes in is your revenue, and money that you actually spend is your expenses. Sorted. No problem.
Mhm.
Accrual is I would say a little advanced version of the cash, wherein you encompass anything that you are yet to pay to your suppliers or you are yet to receive from your customers. So basically, I mean, in the cash basis, if we'll just add accounts receivable and accounts payable, money or creditors and debtors, if we say so,
Mhm.
right? Then that makes accrual basis of accounting, right? And there are other stuff as well, but we'll keep it simple. Now with
Mhm.
Uncle Sam coming in and saying, okay, you can follow either cash basis or accrual basis. We are like, okay, fine. Cash basis sorted, accrual basis done. But now they say we have like a modified accrual basis. What you just mentioned was more like a modified system by Uncle Sam, wherein variance says that for the money, for the revenue or for the income, whatever you have earned during the year, during let's say 2020, whatever money you have received in your bank account is your income, right? Whatever expenses that you have paid for the business, all the legit expenses, that's your expenses. But as soon as it comes to cost of goods sold or inventory, right, or we say purchases that you have done, to sell it on Amazon, let's have accrual method in place wherein you just record for the value of inventory or for the value of purchases that you can attribute to the sales that you have done during that year. right? So it's like they are all interlinked actually. So what we are doing is, I mean, suppose you have paid, let's say, $100,000 for inventory during the whole year, and at the end of, because of the Christmas season and everything, of course there is so much of busy season, I would say peak
Mm-hmm.
season for Amazon sellers. So what most people end up doing is buying a lot of inventory in December, which kinds of gets delivered even in January and February,
Mm-hmm.
right? So they say, okay, we have spent like 100 a lot of money at the end of the year. We should be getting that, as a claim, as a tax claim in our return. But Uncle Sam has its own rule, because they want their revenue just like we want ours, right? So they say, no, you can't do that. You can only record or only have that much of cost deducted, which can be attributed to the sales that you have made. If you made a sale of $1,000, and it took, let's say, $800 as a cost, uh, record only 800 as a cost, or claim only 800 as a cost, and leave the 200 as inventory. So that's whole the situation with the inventory, the cost of goods sold, what Uncle Sam says. Slight difference between accrual and cash. That's all how it plays.
So,
I know, it looks like you have a lot of questions.
So, Kevin, in fact, what happened was we had like a lot of clients. They used to ask us to draw up the profit and loss account till the month of November and in the month of December, so that they can do a lot of purchases and all those things from China before the Chinese New Year starts.
Right.
So, I mean, that is something that came to limelight in front of Uncle Sam, and he said that enough. I mean, you guys are just procuring the inventory at the end of the year and claiming those as expenses. So, I mean, no more of doing that now. Enough is enough. Whatever you have done in past is okay, but going forward, even if you're purchasing inventory towards the end of the year, you will have to pay tax till the time it is not sold.
Yeah.
Right?
So as I kind of understand it, and feel free to correct me here, because
Mhm.
I'm not the tax expert. And so as I understand it, the cash basis is basically operates just like how it would with your personal expenses. It's the expenses
Right.
on the day it happens. Now, when I was in the corporate world working for Fortune 500 companies, there was a lot of accrual and kind of fancy accounting, and I'm sure they were all doing it by the books, so to speak. But it was a lot of the expenses weren't necessarily recorded the month that they happened, or it was a lot of, kind of if thens and receivables and payables and all that. Whereas if you make an expense on December 31st, then it's in that year. If you make it January 1st, you can't take that expense until the following year. So you have to wait an entire year. So that's why a lot of people at the end of the year sometimes will purchase things. I sometimes will do this myself. I'm like, if I'm going to, because I usually get, a decent amount of cash around the holidays. So in my e-commerce business, I start thinking like, okay, what are some things I would need? Because if I'm going to purchase it in January, February, I might as well just purchase it now, because I'd have to wait another year to get the deduction for that purchase. So I'm like, if I can subtract uh, my taxable income, I might as well do it for this year. Now, with inventory, it doesn't quite work that way, because inventory is on an accrual basis. So the IRS because the IRS looks at your inventory as an asset, just like your bank account's an asset. So if you have $10,000 of inventory sitting on the shelf, so to speak, at the end of the year, that's not all stuff that you were able to take as a deduction, because essentially with accrual, you're, correct me if I'm butchering this, you're taking the deduction for the cost of goods sold for the inventory purchase, not at the time you made the purchase, but at the time the sale was made to the customer.
Absolutely. So just to give you a simple example on
Mm-hmm.
that, let's assume that you have purchased 100 units of XYZ product, right?
Mm-hmm.
So, I mean, even though you have purchased it, you will not be claiming it as an expense. You will be claiming it as an expense the moment you will be selling it. So let's say, I mean, till December, you ended up selling 50 items only. So for the cost for those 50 items is something that you will claim in your tax bill, and the cost for the remaining 50 items that you have still in your warehouse or in the third party warehouse is something that you will take it to the next year.
Right. Because it hasn't been purchased yet. And
It
so
hasn't
you're
been, it hasn't
accruing
been
it
sold.
to then take
Yeah.
it later on. So
Yeah.
Yeah. Okay.
And there are just like two or three exceptions. So, I mean, inventory is there, depreciation is there. So, I would say, I mean, nothing more to worry about. There are just two or three exceptions. Just worry about those, and rest everything will be on the cash basis.
Got it. So, one of the other things I want to address here is international selling, because I know that's one thing that trips people. I've seen people in tears almost because they're so excited because they wanted to expand into Amazon in Canada, and they went to their CPA who said, I don't do that. And 9 times out of 10, it was a miscommunication on the question that should have been asked, because I tend to find there's two different buckets of tax. There's sales tax and there's income tax. Income tax is on profits. Sales tax is on whatever the sales are. So in the US, we're not providing tax advice in this thing, so please consult with your individual tax preparer. But for those listening, but for, generally speaking, the income tax is going to go to your local government wherever you live. So if you live in the US, it goes to the US government and potentially the state you live in. And then if you have sales tax, which in most cases in the US is being handled by Amazon, but there's still other nuances of that. So we won't get into all of that here. But in Canada, it's pretty much more black and white. Of Canadian Revenue Agency says GST, HST is going to be charged. Amazon collects it, they give it to you, and then you give it to them, which is actually fairly simple once you kind of learn that process. Now, what trips people up is if you were to just use a spreadsheet and say, here's my sales from the US, here's my sales in Canada, just because they both say dollars, it's not the same thing. Or now when you start getting into the UK, now it's in pounds. And so now, or in Germany, you got euros, and then maybe you're in Japan and you got yen, and then you got Australian dollars. Like, how do you keep track of that? So now you got money in different currencies, because it's not as simple as just, I can't take, my Australian dollars sales and take US dollar expenses. Like, how do you account for that?
The most important thing whenever you are going international, I mean, I would rather put it like there are two or three things. Number one, do consult a person who is knowledgeable rather than just your accountant. Because I mean, let's assume you're based in UK and you want to expand your business to US. Then there are a couple of registrations. Number one, you will have to register with IRS, and they will give you a number which is called EIN. And
Mm-hmm.
then you will also have to register for sales tax. So I'm not going into nitty-gritties in terms of how the compliances and all those things are going to work. But I mean, again, this brings a very valuable point of multi-currency. So in case you have like operations in more than one country, you should have an accounting system. We usually recommend QuickBooks and Xero to our clients, wherein I mean they can link the bank accounts for all the different currencies therein. The data can be looked into the local currency for each and every market. And when you are driving the report in your home currency, you get everything converted into pounds or in US dollars or the Canadian dollars. So I mean, in that scenario, do go in for the accounting software. Do not rely on Excel spreadsheets, or do not rely on your mind, because believe me, after 3 months or 6 months from now, everything is going to be messed up and you won't remember anything. I mean, you will be looking for a receipt in yen, and you will not be able to find it, and you will say, oh my God, how did I end up spending so many pounds? But the fact would be that amount is going to be in yen.
Right, right, right. But the nice thing is, to your point, Xero and QuickBooks have multi-currency versions of it that it can link it to whatever your home currency is.
Absolutely.
And when it comes
Absolutely.
to accountants, one of the things I give the analogy of sometimes is, if I went to the eye doctor and I said, "Hey, eye doctor, they give me a new prescription for my contact lenses," and then I say, while I'm here, my tooth hurts. Can you take a look at it? And they say, I don't do teeth. And they're like, but you're a doctor. Why can't you do my teeth? Because I would need to go to the dentist. And so, accountants who specialize in things like income tax focus on income tax. You want somebody that focuses on Canadian sales tax, go to somebody that focuses on Canadian sales tax. There's experts for everything. And so you want somebody for bookkeeping, find somebody who's an expert on bookkeeping. And another thing I will say that I think will give people a little bit more understanding of really how multi-currency works. my sister is the principal in elementary school. And before she was a principal, she had a job as like the math specialist, which basically her job is to go around to all the grade levels and make sure that all the math stuff was being taught correctly. And I asked her, so as both the principal and a former math specialist, she understands what grades are taught what. I said, all right, so if I was to say $1 in the US is equal to 1.3 Canadian dollars, which I don't know if that's the exact number right now, but it's usually around there. So let's just say $1 is 1.3 Canadian dollars. So $20 is how many Canadian dollars? What grade level would figure that out? And she goes, oh, well, that's basic ratios. That's sixth grade. So if you have completed the sixth grade or your equivalent in your country, chances are you can figure out the currency. It's not that complex. I'm oversimplifying it. There's a few other moving pieces with it, but the basic premise of it is just that. Is that a fair statement?
Kevin, I would say that's a fair statement, but it's not as simple as it appears, because
Sure.
when you're going to the tax accountant and you're telling him that you have like operations all across the world or in the different parts, then there comes different accounting principles. So let's say, I'm not sure whether I should go into technicalities or not, but it's important to give a little flavor of what I'm about to say.
Okay. Okay.
It says that in case you have like sales on different dates in a month, you need to convert all those sales on the respective dates. It's just not going to be like a division, a factor of 1.3, right? So let's say, on first, the factor was 1.2. If you're converting the Canadian sales into US dollar, you got to apply 1.2 on the sales which occurred on first. Now on 15th, the factor was 1.25. Then you got to divide it by 1.25. So similarly, we need to consider the dates for each and every transaction when they have occurred. This is about the rules that were to be applied on profit and loss account. Then comes the balance sheet rules. There are different rules for those. So again, if you want to go into technicalities, I can go into technicalities, but I'm sure that may be a bouncer for a lot of people.
Sure. Now, one thing I will say is like, so Manvi, like I believe when you're doing my books, what you're doing essentially is you're taking the data from Amazon, let's say in Canada or UK or wherever, you're invoicing it. In Zero figures out the difference. And so that way it's accounted for with, to Siddhartha's point, that it's not always 1.3. It's a constantly changing thing. And as the way my CPA who does my income taxes has explained it to me, as long as there's a methodology that's consistent, that can be explained to the IRS if ever audited, that's really what they're looking for. And so as long as there's a way to explain it, and the nice thing is software does a lot of that we don't have to figure it out once you've put it in there. Is that a fair statement?
Yeah, absolutely. You are right. The software does it automatically takes the foreign exchange rate on that date, and it kinds of, as Siddhartha said, for the balance sheet item and for the profit and loss items, the methods are different. So system automatically knows that, okay, this is a balance sheet item or this is a profit and loss item, how much currency conversion or currency exchange fluctuations, whatever happened during a period of time, how they needs to be considered. So system automatically picks it. And yeah, there is a lot of methods to do it, and one needs to just follow one method, and IRS accepts almost pretty all of them. They don't say that, but they need a method. They just don't want you to use any currency rate. They want you to use the a current rate, or the rate that is as per the methods described.
Yeah, exactly. And I think a lot of it, as I understand it, is as long as you can say with a straight face and have documentation behind it, which having good books allows you to do, that you're protected, so to speak, if something were to come up. And if there wasn't something out there, is the cleaner your books are, the cleaner you're going to get out of if you were to be audited for whatever reason. Hopefully, knock on wood, that doesn't happen.
Put it beautifully. You have put it beautifully. The cleaner the books, it's a clean slate. IRS will say, okay, come, hi, hello, and they'll say bye.
Yes. So the way my accountant has explained it to me, like if you're able to say, here's my reports, Here's the
Mm-hmm.
balance sheet, here's the profit and loss, here's all my bank statements laid out, printed out. You're
Wow.
say, well, this person kind of knows what they're talking about. It's when they realize quickly, like there's a lot of just, I feel like in the bookkeeping, that's where it becomes a problem. And I use the term, I feel like it's not based on a
Right.
method. It's based on
Estimates,
estimates and well, kind of sort of.
confusions.
Yeah. If you're using the word well or just at the beginning of the sentence to describe something, well, I just, that's probably a problem and it's time to get a bookkeeper. So
Yeah.
if somebody is looking to get a bookkeeper or have somebody look at their books to see, are they doing it right? Is there anything they could do? How would folks, is that something you offer that somebody could get a consultation?
Oh, definitely. I mean, given that goes unsaid. I mean, whenever we sign up like a client, or in case anybody who's watching this particular show or podcast of us, believe me, I mean, our team would definitely offer you a free consultation wherein we would review the status of your books. We would review whatever questions you have, and we'll be ready to give you whatever advisory or I mean specific services you require. Having said that, I mean, just to address Kevin, one of your questions, which in fact attracted me, and I'm sorry to bring it up at this
Go
juncture,
for it. Go
but I
for it.
mean, I am sorry, I'm not able to resist myself. So one of the big mistakes that people do, they want specialists when they are searching for doctors, right?
Mm.
They want to go for the dentist, they want to go for the eye doctor, they want to go for all these people. In terms of accounting, I mean, do not go in for specialists for specific cases unless you have grown too big, or unless you have any specific issues to be discussed. I mean, till that time, go in for a general physician. The general physician are the people who can actually help you out in resolving 90-95% of your doubts. So that is all that I wanted to say.
No, fair, but I will give you credit. So you're saying you're a generalist, but I'll give you credit. So you guys are on the Amazon Service Provider Network. So you
Yes.
have been blessed, so to speak, by Amazon. You've been doing my bookkeeping for 3-4 years, and so if someone's, and I've
We are
sent
there
quite
on
a few people to you.
Upwork, we are there on People Per Hour. So, I mean, there are a lot of platforms wherein we are available, right?
Yes. And so you understand e-commerce. You've been doing this for a while. You've been doing my books for a while. My CPA who does my income tax is happy with you. And again, like I said, he's a great guy, very knowledgeable about accounting and CPA stuff. And he can get real in the weeds on that kind of stuff. But he's very happy with the bookkeeping that you guys have been doing, and he's commented about that over the years. So kudos to you guys. So if someone listening to this does want to get a consultation, just, hey, am I doing this right? Is there something to be done differently? Or you want somebody to do your books, you have a free consultation. If you go to maximizingecommerce.com/books, that's plural, because you're looking for basically someone to look at your books. So books is kind of the short of bookkeeping. Oftentimes people talk about in accounting the books. So if you go to maximizingecommerce.com/books, in full disclosure, I am an affiliate, recently became an affiliate. I had been sending you guys folks, and just because like, hey, you guys are doing a good job. And I get this question for people all the time, like who does bookkeeping? And I will say your prices are very reasonable, especially considering your backgrounds in accounting. And hopefully people see that you are both very knowledgeable when it comes to this stuff. And, this is something that, for the price, for less than a bookkeeper, a US based bookkeeper, you could have somebody that's a CPA, chartered accountant, um, do your bookkeeping for you. So definitely something to keep in mind. Any closing thoughts on that?
No, absolutely, Kevin. I mean, that's very true. I mean, that is like the USP, and that is the reason that I would say. I mean, in just like 10 years or 13 years of our setting up our shop, today we have like 200 employees, and we have like 700 clients from all the different parts of the globe with whom we are working for, and it's a constant endeavor to keep on increasing the number of clients and also maintain the quality services. So I'm sure, I mean, I'm so happy hearing it that you are happy with our services, your CPA is happy with our services, and that gives us like even more confidence and reasons to believe that we are on the right path.
Well, thank you. Thank you. And kudos to you both. Kudos to you, Manvi, who has been, you and other folks on the team have been handling my books personally for a while now. So definitely check out maximizingecommerce.com/books. If you're driving in the car, you can always go back to the show notes, or if you're listening to this on YouTube, in the notes below, there'll be a link as well. So you can check them out. And again, you could be buying me a cup of coffee if you end up going through them, but they're offering a free consultation, so you might as well at least take them up in the consultation. And they're not hard salespeople from everything I've seen. But if it makes sense, it makes sense. Otherwise, at least have somebody take a look at your books and get an outside opinion. I would definitely recommend that.
So, my recommendation would be, even if you're using the services for the other bookkeeper, do not hesitate to share your book, share your thoughts with us,
Mhm.
so that we can give you like a third party opinion. And I mean, whether you use our services or not, that is completely your prerogative. But I'm sure as a business owner, you want to know whether the bookkeeper who is working with you, is he doing the things in the right manner. So I mean, believe me, we'll be happy to share our honest and candid opinion with all of you.
Awesome. Well, this was very helpful. I learned a few things, and hopefully everyone listening learned a few things about bookkeeping and the wonderful world of debits and credits. So thank you both for coming on.
Thank
Thank
you,
you,
Ken.
Karen. Pleasure
Thank
talking to
you,
you.
Ken.
Thanks.